Officer Sales Training with the Mortgage Calculator. Today we have a special guest here to talk about sales, which is our sales manager. Who better than to talk about sales than the sales manager, right? So we get a lot of trainings from Jose on the loan side of things. Today we're going to be talking about more of the sales side of things. I'm going to be asking him some sales type questions. And also, you can all ask him questions as well. I'm going to keep the chat on the screen so that anybody can drop any questions they have in there for Mr. Jose. You can drop them in the chat there. We're just waiting a second here to go live on all the different platforms, but we appreciate everybody tuning in nice and early. Again, we got the chat up on the screen there. Go ahead and drop comments there in the chat as you tune in. You can drop questions in the chat as we go through the conversation here today. And all right, it looks like we're live on all the different platforms here. So we will go ahead and get it started. Again, everybody, I'm going to keep the chat up on the screen this whole time. So feel free to drop any questions you have in there for Jose. Questions about sales, right? That's what this training is about. So any sales type questions you have, go ahead and drop them there in the chat. But we'll go ahead and get started. So, welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, and this is our loan officer sales training that we do every day at 12 p.m. Eastern Time, where we go through more of the front end and the sales end of the mortgage business. Today, we have a special guest, which is our sales manager, Jose. Jose, how you doing?
Doing great. Thank you very much.
All right. So again, everybody, the chat's there. Go ahead and drop any questions you have. But I'm going to ask Jose some questions here. So first off, Jose, let's talk about how did you get your first loan? When we had other special guests, people were asking them like, what was it like for your first loan? You have a pretty unique scenario that happened to you like what 80 years ago or something. I was just like, but let's talk about the first loan you ever did and how you got it, how you made that sale.
Well, back in the olden days, before we had internet, right, and all that, before we had cell phones, right, we had the beepers, cell phones, we had the bricks that were out there. I obtained both licenses, my mortgage loan origination license and my real estate license, all within like 4 days of each other. I jumped into this, all in, wanting to be a consultant for my customer. That was my goal, right? I was told, "Oh, you can't wear two hats." I said, "I'm not wearing two hats. I'm wearing one hat, consultant for my borrower's needs for, real estate acquisition, disposition, and financing." Right? That's my job description. But with that being said, I got into the business, with a sense of urgency. Set of newborn twins, change of career, um, limited resources because I had just taken about almost 9 months off of work to stay home and help the wife with the twins, and it was an urgency situation, right? Sink or swim, right? Had very limited amount of money, and it had to happen. Failure was not an option. I needed to close something within 45 days because that's all the money that I had. So I quickly went out there and started going through my sphere of influence, right? Because that's one of the things that we're all taught in the very beginning. What do you do to try to drum up business, right? We didn't have online, internet, or any of that kind of stuff. So I had to get creative. So obviously, what we all should do in the very beginning is go to our sphere of influence, right? Go to all the contacts that you have. Now it's easy because you can go to your cell phone contacts, you can go to your email contacts, and you can put them all on an Excel spreadsheet, right? Put them all on there, then put them all in a contact manager like Mailchimp. I mean, that's what we could do now, but I didn't have that option. I just went to all of my sphere and started reaching out to friends and family and everybody that I knew or that I vaguely knew and had their information, and let them know that I was in the business as a real estate agent and as a loan originator. So, um, and also I went to my the office who I had my real estate license with. Obviously, I didn't have any listings at the time. I was fresh to the business, nor did I have any hookups, like being, rich and famous and having all these rich and famous people to just say, "Hey, I'm a realtor now, and let me sell you $1 million mansions." Right? I had to think how to get creative and generate business. So, besides going to my sphere of influence and letting everybody know what I was doing for a living now, um, everybody and their mother know, I also went to the broker of the office where I was at and I said, "What can I do? Can I advertise other people's listings?" And he said, "Sure. Yeah, I mean, they don't mind. You're going to be paying for it." I'm like, "Yeah." "It's their listing." I'm like, "Yeah." And so that's fine. And if they sell it to somebody else, right, you don't make any money. I said, "That's okay. I need to generate calls. I need to generate business, right? Those are going to be my leads that were going to be calling me asking about what I was doing." So I went ahead and I took out a full page with my limited resource that I had left, right, with the credit card. Took out a full page ad, right, with my photo, my wife, my two kids in the photo, very famous photo, by the way, the family man. And I did, like, I think I put like 12 properties on that page, plus also advertised my mortgage services that I could do, and just, started fielding the calls. But my very first deal was from the sphere of influence. It was actually a a co-worker of one of my sisters-in-law, and she wanted to buy a place and needed the financing. So I pre-approved her, but the place that she wanted to buy, right, there wasn't really anything available in her price range. She wanted a 2 bedroom, 2.5 bath. There wasn't any. So I went into the Bresser's Cross Index Directory. That's a fat book there, probably like 1,000 pages. And it has, this was the Bresser's Cross Index Directory for Miami-Dade County. So it had every phone number and every address in Miami-Dade County with the person's name cross-referenced. So I knew the subdivision that I wanted to focus on. So I went and I highlighted about 40 or 50 of the properties in that subdivision. I wrote each of them a handwritten letter. "Hey, I have a buyer that wants to buy in your subdivision. There's nothing available in 2 bedroom, 2.5 bath. Are you interested in selling your unit?" And I actually had like 4 people that said yes. And took my buyer. I did have a buyer. This wasn't just like a gimmick to get them to call me. And I showed my buyer the units, and I sold my buyer one of those units. And I also did the financing for her. My first deal was a double dip, from the double dipper from the beginning, and it was a whole $62,500 sale. That's what a 2 bedroom, 2.5 bath townhouse condo was selling for in the West Kendall area, Kendall Lakes Townhouses, still remember, off 137th Avenue and 80th Street. And I got both sides of the deal, and it closed just in time, right? I think it was like 35, 40, 45 days from the time that I started my maneuvers to the time that we closed the deal. And, from then on, it basically, I got 3 more deals from those letters that I sent out. And actually, no, because then one of the people that I sold their unit, I actually went and sold them another unit somewhere. So I was a listing agent on their unit, sold them another unit somewhere, did their financing, and that just kept the momentum going. But it was just a constant. It was just, you had to put your nose to the grinder and make it happen. And really, I strongly feel that, besides my work ethic, my sense of urgency definitely contributed to my needing to close that in 40 or 45 days. This wasn't my part-time job. This wasn't my job where I was going to be dabbling to see if I could do that realtor thing or that loan officer thing. Maybe I get lucky and get a deal once every 3 months. No, this was my profession, right? This was my career. I was treating it as such, right? We have to be self-motivated when we are in sales. And whether you like it or not, when you're in commission, I don't consider myself a salesperson, but it is a sales type job because you are 100% commission. That's what we were. And if you're not self motivated, if you take your eye off the eight ball, you're going to get in a situation where you're not going to be able to recover because time passes very fast, right? And you close in 30 days. So if you need that money in 30 days, you need to generate the deal today, not in 30 days. And then, oh my God, and now you're out of business because, your liquidity crisis, right? You had bills and the money wasn't there yet. You really cannot take your eye off the ball. You have to have that sense of urgency as well. I know there's some people that out there that have second jobs. Maybe they're driving Uber, DoorDash, this, that. That's all good. But unless you realize that this is your career, this is your profession, you run it, right? This is your business also. We all have like little businesses within ourselves. If you don't treat it that way and plan accordingly, you're not going to make it. It's tough enough as it is with all the competition out there. We try to train you to be different, to differentiate you from the masses, to arm you with tools, extra tools that other people don't have, all the knowledge other people don't have. But you have to use it. You have to apply it. And you have to put your nose to the grinder, and you have to make it happen. Nobody's going to make it happen for you. There is no participation trophy in being a loan officer or being a real estate agent in sales. If you don't make it, you're just gonna not make it, and you're gonna have to find something else to do.
Right. So I think it's so interesting because when you look at that as an example, you didn't have a formula to follow. Nobody put it out and said, "Here's a system, plug into it." You literally, your boss said, "I guess." I mean, that's the plan that you came up with was not a plan that was laid out for you by somebody. But also, what's crazy is that you created a sale out of thin air, essentially, by getting people that had no intention of selling their home to sell their home. They weren't listed. You created a listing for your client because that's what it took to get the sale, right? And in creating a listing by asking these people if they wanted to sell, you're saying you got another deal from one of them as well, right?
Correct. I started the chain, where the seller on the one property then became the buyer and the loan on another property. So definitely guaranteeing that I was going to be able to eat.
Right. Yeah. Then you're up and running, and you had already let your whole sphere know what you do. So now I imagine you have deals starting to slowly come in from the people that you already know, right? And then it
Yep,
kind
the
of gets.
sphere worked really good. I just kept tapping into them, and that first year, probably the first year and a half, I picked up quite a few deals from the sphere. I think I went through all the friends and family that I had, probably picked up like 5 or 6 or 7 deals from them. Then you just got to stay on them to get referrals. That's the key. It's in the beginning. This is like a physics test. You have to start from zero. You hear of inertia, right? That is the force that you have to exert to start a object that's not moving to start it moving, right? And that object that's not moving is being held down by gravity. So it's not like a zero force that you're going to have to put out. In the beginning, you have to put out more force because once that object has momentum and it's moving, you're just maintaining the force. But in the beginning, the force that has to be applied to start from a zero movement is much greater than once you have momentum and you're moving.
Absolutely. And you're spinning the flywheel, and it'll keep spinning faster and faster, right? For those that just jumped on, I see some more people jumping on. I got the chat up there on the screen so you can ask Jose any questions you want, pertaining to sales and stuff as we go through here. Anybody that wants to ask him a question. My next question for you, Jose, would be, what was your hardest loan? I know we joked about probably Nick's loan,
Yeah,
my brother here. Is that the hardest loan you've ever done? And what was it? What was it like?
yeah, I would probably say the most difficult loan I have done was Nick's file. Nick's file. because it was a complex deal with a lot of moving pieces. It was five properties um, concurrently purchased from the same seller, being purchased. What ended up being it seems like they created a program for us because for the first couple of weeks the underwriter and the setup people didn't really know what to do with the file, and I kept pushing and escalating till they finally connected me with like a senior underwriter, and they assigned that senior underwriter to us and to all five loans. And then that senior underwriter and I started communicating um, a lot profusely on that file. And he basically, liked working with me and helped me immensely. And obviously I helped the cause by, guidelines and documents and everything that I was providing and clarifications that I was giving him. So that basically he seems like they created a hybrid program for us where they combined certain things there. And frankly, at that point, I held on for the ride, gave them what they wanted, and we were able to close it. But it was a very, very difficult loan because we thought we were going to do a profit and loss loan, but we ended up doing a bank statement loan. It went the opposite of how it usually goes. Usually we go bank statement and then we got to go P&L. We started P&L, and then we ended up with bank statement plus W-2s. So when I was saying we had a little hybrid action going on, we used W-2 income with check stubs, and then we also were able to use bank statement income. So it was a combination of personal income from the W-2, bank statement income from multiple businesses that Nick has. So it was very interesting. And then I guess what also made it very difficult during that time, not wanting to get too personal, was that my father passed away during the middle of the loan, and I, basically still managed to close those loans during a very trying period of my life. So that just added to the difficulty, but the overall difficulty was just caused by the fact that it was a five property portfolio being purchased, and we went in with one way we thought we were going to do it, right? But through a lot of communication that we had with underwriting and with the account manager also, who helped us immensely over at the investor where we submitted the loan, we were able to close it. And throughout the process, we even had to get legal documents created and everything, which made it a little bit more difficult because way deep down there, embedded in the title commitment, was a one line reference to easements. So they're like, wait a minute, there's something going here about easements. So that resulted in our having to reach out to attorneys and have three party wall agreements created to be able to close, because there were three attached walls for the units. So three units shared two walls and two other units shared one wall. So you needed to have an agreement that clarified that, and that everybody was in agreement that they were sharing a wall. So that also prolonged the process a few more weeks. But we were able to get it done. We thought that was going to be the curveball that was going to, cause us to strike out. But we hit a couple foul balls, and then we finally did get a hit with it, and we're able to close the deal. But yeah, that was again very, very, very difficult. So many moving pieces there, and so much was on the line, right? So it was a lot of pressure.
And it ended up working out well because of you being the consultant and pushing it through and doing a deal that a lot of people wouldn't have been able to buy those properties, which I'm assuming is why Nick was able to get the deal he did on them, because everyone else is having trouble financing them, right? But Nick Nick has an amazing loan officer that pushes it all through, and now it's an extremely successful Airbnb that he's doing extremely well with, and it's getting an extremely good return because he bought something that a lot of people can't even finance. The only other option would be for people to essentially come in with cash for the most part, right? Jose has every loan program out there imaginable and still barely squeaked by essentially kind of having them like create a new one. So anybody else would essentially have had no chance at
Yep.
getting any traditional financing for those
I mean,
properties.
what happened here, definitely, yeah. When we got in on the deal, somebody else had just been denied for a commercial loan, right? So this is like, if you recall, the rates deal we had today, where it was the opposite situation, right? Where we were talking about the commercial loans and how more restrictive they are. Well, somebody had tried to finance it through a commercial conduit, uh, got hit with counter offers for LTVs and all that kind of stuff. In the end, was not able to close it because they didn't have the additional options. Right? They were looking at long term rent, debt service coverage ratio based on long term rent, and all that kind of stuff that they do for commercial loans. Whereas we were able to finance it as five individual single family properties because they were essentially attached single family homes. They weren't even PUDs yet because there wasn't any uh, association, homeowners association yet, nor any association fee. We were able to do it that way, which really opened up a lot of other avenues for us because that we were able to do it with a bank statement option, right? Bank, like I mentioned, bank statement plus W-2 income in one loan, whereas the commercial conduit could not do that, right? They were like, it's either going to work as a long-term rent based on that, it's going to cover at 1.2, or it's not. And it wasn't, and they were hitting people with LTV adjustments, and it was a big chunk of change, because it was over $2 million at that point. This person that got turned down was at a higher sales price than what we got in. But when we got into the deal, we were able to convince them of how solid we were. We were able to negotiate a good price, and then communicated a lot with the seller's agent, and in some cases even a conference call with the seller's agent and the seller throughout the whole process, informing them when we had delays, why we were having the delay, what we were doing to resolve the issue, because was needing extra time, right? I needed, but I let them know way in advance that we were having these issues. So it wasn't like a last minute, hey, we're not closing in 5 days or in 4 days because this and this and this. No, as soon as the issue came up, I communicated the issue to the agent, and then after we had a couple of issues come up one after the other, then we did a conference call with the seller and their agent, and put everybody at ease, right? So the moral of that story is, nothing is perfect, right? But when you're facing the adversity in the loan process, communicate to all parties involved in the proper accepted method to communicate with that party, right? Like, you're not going to call the seller direct. You're going to reach out to the agent, and then they'll communicate. And then if they want to do like what they did with me, a conference call, because the seller wanted to ask me questions, and he's a sophisticated guy. He was the builder of these properties and the builder of a bunch of other developments, so he knew what he was doing. So he wanted to talk to me, and I'm like, sure. And we spoke, and he was happy with, well, not happy with the delay, but he was satisfied, let's say, with my what I told him, the information that I provided. I empowered him enough so that he could feel comfortable to give us the extension to the closing and the extension to the financing approval period. Because you guys got to remember, when you're in these deals, uh, you have a closing date, but you also have a financing contingency period, loan approval period, whatever the contract that is being used by that board may call it. But it's basically, your financing contingency period is a period during which the borrower can be denied, a denial letter can be provided, and the borrower can get his escrow money, his deposit money on the contract returned. Once you exceed that period, if an extension to the financing contingency period isn't provided and only an extension to the closing period is provided, guess what? If at the end they don't close and you didn't extend the financing contingency period, it's really at the seller's discretion if they want to return the escrow or if they want to put it into an escrow dispute, which is then going to tie up the property a little bit, but still, if the seller is really upset enough and it's a big enough of a deposit, the seller may say, hey, you know what, I'm going to hold back. We can take offers subject to clearing this scenario up, and I want to keep their deposit. So luckily in our scenario, that wasn't an issue because I communicated with the other all parties involved and was able to get extensions to both financing approval contingency period and loan closing period.
All right. So it looks like we have a question here in the chat, or just a point that to go over, which is, can you give one main point on overcoming objections when your borrower
That's too broad of a question where you need to tell me an objection that you want to overcome. You
How
know,
about the rate's too high?
the rate is too high. Well, the rate is relative to the time that we're in. Now, at that point, I talk to them about it depends first about what loan type we're talking about. So let me back up a second. When I'm speaking with my borrower, right, or prospective borrower, I like to empower them with information. But in order to empower them with information, it's not just like I'm going to just talk them to death and hope that I just overcome them and overpower them with words. I am going to interview them. We're going to have an interview, right? They may not realize it's an interview, but that's actually what it is. I'm gathering information to see what their scenario is, and then I explain their scenario to them. I explain how their credit score, where it is going to affect the situation. I explain how the income type, if we're full doc, if we're bank statement, affects risk, right? We're constantly talking about risk, right? The risk associated with the loan, the risk associated with the credit score, the risk associated with the income type, the risk associated with the property type, right? And all those risks are then combined and results in an interest rate, right? And then if at that point they start talking about my rate being higher or lower than somebody else's, that really depends on what that other entity is offering them, right? I basically will state that everyone pretty much has similar rates out there, right? Rates are going to be based on the cost of the money. Now, in the end, we know that the cost of the money plus the compensation is going to equal the cost of the rate, and we pay our loan officers well because our loan officers work, right? You roll up your sleeves and work, and you're entitled to make that money. So what I find most of the time is that if you empower your borrower properly, if you really fill them in on all the details, it doesn't really get there. At some point, they are happy to be working with you. That doesn't mean that your rate can be 10%, the competitors can be 7%, and they're going to forego a 3% difference. That's usually not what happens. If that situation is happening, it's because either you haven't accurately analyzed and may not be offering the right product, or, as probably happens most of the time, the other parties just BSing the borrower. It's an application taker throwing some low rate out there to get that application, put it in through the system, and then they're going to walk away while the company takes over, and maybe it closes, maybe it doesn't. It's like spray and pray, right? You don't get referrals that way. You don't have a sustainable profession and career that way by doing that. That's just going to burn you out because you always got to keep, like digging up where you're going to get your next deal, instead of, once you're long enough in the business, right, then you start getting these organic referrals, right? People who you've dealt with in the past. And that's what Kyle was talking about, the flywheel, right? Either they're going to do another deal with you, or they're going to refer you deals. But what I find in my 28 years experience, and obviously it takes time to garner the experience and feel more confident in what you are professing to people, but that's really what it boils down to. If they feel comfortable working with you, if they feel like they're getting good value, and great service, good value for the rate that they're getting. Like if it's good enough, maybe a quarter percent higher, maybe a quarter point more expensive than the other person, but man, you made them feel more secure that the deal is going to close, that you're going to be there to walk them through the deal, that you're going to be there to answer their phone whenever they call. I tell them as part of my interview, I tell them, you can call me anytime. I'll answer the phone. You can call me in the weekends. If you can't sleep on Sunday night at 9 o'clock at night, and you call me, I'm going to have your number saved. If I see it's you calling, I'm going to answer your call, because I know if you're calling me on a Sunday night at night, that's because you can't sleep because you're worried about your deal. I'm not going to have you go to sleep like that and have nightmares and say, damn, that Jose doesn't answer the phone, right? I'm going to answer the phone. I'm going to put your concerns at ease. And then when you hang up, you're going to say, man, wow, that Jose, he really cares. He answered the phone on Sunday at 9 o'clock at night. And then they're going to tell their friends, man, you know what? My loan officer answered my phone Sunday at 9 o'clock at night, and he told me everything was good. He didn't tell me, let me check with the processor, let me check with this person, let me check with that person to see what's going on, because you are the manager of the loan, right? You're the captain of your ship. You're the one that's in control. You're the one that's accountable. Yes, we have a team that helps, right? We have processing team that helps you. We have team leaders that help you. We have managers like myself and Colin that help you, and Nick. We all help you, right? But you have to help us help you by sticking to the procedures and the guidelines and the training and the resources and empowering your customer, right? Because it's not just send the customer a quote and they're going to miraculously work with you because the quote is just so good. That does happen at the mortgage calculator because we do have good rates as lenders, but that's not all there is to it. And if that's the only way you do it, if you're just sending out the quote and you're not really doing anything to follow up on that quote or anything, you're not going to get the deals. And even if your rate is good, if the customer just wasn't wowed by you, if there was no connection made between you and that prospect, it's not going to happen, right? There has to be a connection between the two. And once that occurs, it's then you don't have to worry about being nickel and dime. Now there are those people out there that you can't please everybody. Their sole purpose is just to get that rock bottom number on a piece of paper, whether it closes or not, and then they'll worry about it later. That's fine. You can't help that. You can't get 100% of the deals, but you do have to focus on getting the ones that you can get, right? The people that are open to the people that reached out to you for a quote. At that point, it's not just give them a low quote or what you think is a good quote. Give them relevant quotes, give them multiple options, and then follow it up with a good interview so that you make the connection with that borrower, and then they're going to commit to working with you.
Right. And let them try to call Rocket Mortgage at 9 p.m. and see. Anytime they call Rocket Mortgage, they're going to get a different person, right? They're calling some main 1-800 number. So that's a big deal to, provide that personal service. Maybe Rocket put that number on a piece of paper for them that might be lower because they didn't check their credit yet. And but at the end of the day, it's about the service.
Yeah,
So,
we know that happens.
right. So we'll
That
take.
happens too often out there. There's too many people out there that are just doing pre-qualifications based on information that was provided to them over the phone. That's it. No vetting, no credit, no DU, no nothing. Sure, here's your pre-qualification letter, and then when they get the contract, that's when the truth comes out.
Right. All right, so we'll take one last question here and then we'll wrap it up. The question is it best when you don't know all the answers being asked at the time of the interview to reach out for assistance, then get back with the bar within 24 hours? So essentially, do we have to be afraid to say that we will get back to them on something?
No, people will appreciate your honesty. I mean, you don't want to seem like you're totally, out there and don't know anything. But if it's a specific question, you may want to tell them, let me research to get you the most updated information on that topic because things do change, and in this industry almost daily. Let me get back to you as soon as possible. I would recommend trying to get the answers that you need and getting back to them the same day. I wouldn't say within 24 hours, but definitely no more than 24 hours.
Yeah, I mean, I would go look it up right then, right? And then try to get back to them as soon as possible, or at least lay it out in an email or something, right? To try to give them the information. And then my last question here, Jose, let's not take too much time here because I think we got to wrap it up. But my last question would be, what do you, I mean, I guess we've touched on it a little bit, but what do you think the key is to longevity in this business? Somebody who's already achieved that, what do you think the key is to having a long and prosperous career in mortgages?
Being a loan consultant, having, I was talking about it last night, right? The considerate loan consultant, right? The considerate loan consultant that's going to look at the borrower's deal like it's their own deal, right? Like it's a family deal, taking all of their needs into consideration, just all the stuff that we talked about, being thorough, empowering the customer so that you can get referrals. Because really, referrals are easy business. That's what's going to give you longevity in this business. If you don't get any repeat business, if you don't get any referrals, if you always have to be finding new business, that takes a lot of work, a lot of resources, a lot of money, right?
Yeah,
So definitely is a
burn
lot
out.
easier if you get referrals.
You'll eventually burn out, right?
Yeah.
There's no way to keep for 28 years to have every deal be a new deal, every client be a new client. It's just
Right.
you'll burn
Well, I mean, prime example now, right? I mean, we get repeat business, right? We talk about repeat business, and if you're in the business, right, as a career, as a profession, and your people know this is your career, this is your profession. Not that Jose works for some company during the week and is a loan officer at night or in the weekends, which again, that's okay, but that usually is not going to result in a lot of referrals that you're going to get from people. So I just had an individual, first time I did the deal with him, a deal with him was probably more than 20 years ago, right? It was like a purchase, $160,000 purchase of a single family home in Westchester. Then that home got sold. They bought another home. That home got sold. They bought another home. That home got sold. They bought another home. This other home that now that they bought was for like 1.15 million dollars. I did the financing on all of the homes that he bought, not the ones that he sold. On some of the ones that he sold, I did the financing on the buyers, but then the one that I sold him for 1.15 million with a $900,000 loan was just sold, and he just purchased another one for $2 million with a $1.6 million loan. So this person and I have been tracking, in the same line. He's building himself up, and at the same time he keeps using me, and definitely helps me, right? Because then I get that nice juicy deal. But to get that person to trust me took like 5 years, 5, 6, 7 years, because he was a referral from a family member of his who was one of my first customers, but he didn't trust me right away. He's a businessman, so it took him a few years. He built up the trust, and then it was like he just dealt with me with his eyes closed. He trusted me that much, so that makes it that much easier, right?
So a referral from a family member of a person that you did a deal with then turns into a couple years building the relationship. But now, I mean, who knows how much commission you've made off of this over the years, but an insane amount of money, especially when you include the real estate commissions, right?
Yep. And I just put like $700,000 back in his pocket. So now he's looking to buy an investment property now with that money. He doesn't just want to put it in the bank. So there's going to be another two deals that are going to come out of that, real estate sale and a purchase. Maybe I'll be able to sell him the 5 unit portfolio that's now for sale. The one that was my toughest deal. I already talked to him about it, and he told me talk to me about it after the closing. and we closed Friday. He got his money, so now I'm gonna hit him up for that, and
He can
maybe
always
get
buy.
another
He can
deal.
always buy my property too.
Yeah, one or the other, one or the
All
other.
right, let's go ahead and wrap it up then. I appreciate the questions there. Thank you, Jose. Great training here, more on the sales side this time. So that was great to see that angle. But remember, we do this 12 p.m. Eastern time every weekday, where we go through the front end and the sales end of the business. So thank you for hanging out with us today, Jose.
You're welcome, guys. And just remember, I may have gone a little bit on a real estate talk, but it's all related to the same approach, right? Empowering the borrower, service, credibility, knowledge, being a consultant, all the things that we preach is what ends up in making any of these transactions possible.
All right. Thank you, everybody, for tuning in. We will see you tomorrow at 12 p.m. Eastern time for the next episode of the Loan Officer Sales Training with the Mortgage Calculator. Have a great day, everyone.